Secretary, and I was back at the Treasury Department in the 1990s. Now, why do I raise this? I raise this because what was the then, he was just Don then, what was he working on? He was working on equitable economic growth at the U.S. Department of Treasury. That was at his core then, and it's his core now. I saw it again on the Biden-Harris transition in the midst of advising then President-elect in the transition and running the Department of Treasury team. After President Biden nominated Don to serve as Deputy Secretary of Commerce, the Washington Post ran a remarkable story about Don and Don's ancestors. You see, they ran a horse and buggy taxi service at this site where we are right here. And it's a remarkable story about the history, but it was also a remarkable story about perseverance in the mid-19th century, about a family trying to seek out for themselves and for their community a better life, about equitable economic growth in a very challenging time. And that Don has that in his blood. I saw that at the Department of Treasury in the 90s. I saw it on the Biden-Harris transition, so I thank you, Mr. Deputy Secretary. All right, before I continue, I'm supposed to always say that I have to note that I'm speaking not on behalf of the Securities and Exchange Commission or the staff, but just for myself. I've gotten that out of the way. Fairness and inclusion, yeah, we have to say that always. The lawyers read every one of my comments. Fairness and inclusion are central to the work we do at the SEC. Indeed, the word fair is right inside our three-part mission: to protect investors on one side, facilitate capital formation on the other, and in between are the markets, fair, orderly, and efficient markets. Our agency, as you might not know, oversees a little over $100 trillion capital markets. Those markets touch many Americans' lives in so many ways, whether they're investing for their future or borrowing a mortgage or taking out an auto loan or a credit card company. They're tapping the markets one way or the other. We at the SEC think about this every day. We think about fairness and inclusion. Fairness is about working towards markets that are free of fraud, manipulation, and other misconduct. It's also embedded in so many of our rules along the way. We at the SEC think every day about promoting fairness, not only through our rules, but through strong examination and enforcement. Inclusion is also about promoting equal access. This means brokers and investment advisors providing services to all members of the public, this diverse nation of ours, fairly and yes, equitably. It's also about the idea that companies, from small businesses to high-growth startups and corporations, deserve access to our capital markets to fund their entrepreneurial ideas, like Don's ancestors did, probably from friends and family, if I had to guess. But regardless of their race, their gender, geography, or any other factor. Now, we at the SEC also think every day about efficiency, competition, and transparency. Why am I raising this in a conference about equitable growth? Our capital markets sit in the middle between those who want to lay off risk, those who want to bear it, those who have money, and those who want to grow it for their nest eggs in the future. With literally trillions of dollars flowing through our capital markets every day, it becomes even more important to promote efficiency in the middle. And it becomes ever more important that market participants, there's sufficient competition to lower the economic rents, to lower that middleman's or middlewoman's profits in the middle, so investors do well and capital formation does well. Well, the history of finance has shown too often, though, that there's less competition in providing financial services to underserved communities, which unfortunately can result in more fraud and more economic rents for those who are less well served. And we certainly saw this going into the 2008 financial crisis. More and more retail investors are accessing the market, so it becomes even more important. Equitable growth means increasing that competition and efficiency. There's another trend at work as well, and it's we at the SEC think every day about the rapid changes in technology. And how can we update our rules to help promote this equitable growth and protect the markets? We're witnessing transformative time in technology. These developments, while increasing access and choice, good things, also raise important public policy considerations, including inclusion, access, and bias. Let me just focus on one point in our technology agenda: predictive data analytics. We all know it. We go on live streaming. They figured out a while ago I'm a rom-com guy, that's okay. You know, I'm not into the thrillers, but predictive data analytics are also increasingly being adopted in finance, from trading, asset management, the like. These analytics stand behind the brokerage apps and robo-advisors we can download on our mobile phones. And though we're still at the early stages, I think this transformation is probably every bit as big as the internet in the 1990s. Today, platforms have an insatiable appetite for seemingly endless array of data. It might be from our Fitbit, it might be from our mobile phones, it may be the telematics from our automobiles. So here's the question about all this data. Do you know one study shows that people that use iOS software have better credit than people that use Android software? Okay, now, here's the question. We have protections in our laws for certain groups of people. Those were embedded in our laws in the 1960s and 70s, in an earlier age when data analytics were taking hold. But what if the users of Android software just happen to be women, or just say maybe members of a racial or ethnic minority? The underlying data used in the analytic models could be biased upon, it could be based upon data that reflects historical biases, along with the underlying features that may be proxies for protected characteristics like race and gender. So this is something that we're really seriously considering. What do we do? I know it's being dealt with also by bank regulators, but what do we do in the securities field as well? As finance platforms rely on increasingly sophisticated data analytics, how can we ensure that new developments in analytics don't instead reinforce societal inequities that may be embedded in the data? The technologies may be new, but the public policy challenges and questions are timeless. And we know, because we dealt with this in the 1960s when we put in place equal protection in our fair housing laws and our Equal Opportunity Act and things like that. Similarly, in the 2020s, I think this is a challenge that we public policy need to take on. We've got dozens of projects at the SEC, from the structure of our stock market to these digital engagement practices. Fairness and inclusion runs through all of them, efficiency and competition, and an eye on ensuring that that competition is also in underserved communities, runs through all of them, and we're going to do what we can to advance equitable economic growth. With that, I've got the honor of also introducing the next speaker, Isabella. I don't even know where Isabella is. Oh, behind the stage. Oh, this is exciting. Isabella Casillas Guzman, Administrator of the Small Business Administration, who serves as a voice for Americans in President Biden's cabinet. Now, Isabella, you don't maybe know this, but you and I have a couple of things in common. You see, we both grew up in families with small businesses. It was a cigarette vending business in my case. We both went off to a small business school in Philadelphia, Wharton, as undergrads. But then you did the risky thing. You see, Isabella then went off and became an entrepreneur. I have so much